Despite being a buyer this year, Buffett's company, Berkshire Hathaway, sold some of its holdings to restructure its portfolio. When Warren Buffett, one of the greatest investors of all time, takes a position, the market takes notice. Investors can monitor Berkshire Hathaway's quarterly stock acquisitions and sales under regulatory filings. A $337 billion market value equities portfolio is managed by Berkshire Hathaway. Investors should focus on Berkshire's sales in addition to its regular high-profile acquisitions. The foundation of Buffett's investment philosophy is the notion that a margin of safety should always come first. An investment's margin of safety is a feature that helps prevent investors from losing money. For instance, if a stock trades for $10 per share, but the company's assets are worth $12 per share, there is a $2 margin of safety. The intrinsic worth of the assets ought to prevent a significant decline in the stock price of the company. Buffett stays away from junk investments. No matter how cheap they become, he rarely acquires failing businesses. One of the best Warren Buffett quotes that new investors can recall is, "It's far better to acquire a fabulous firm at a fair price than a fair company at a wonderful price." He further adds, "Temperament, not intelligence, is the most crucial characteristic for an investor. You need a temperament that doesn't enjoy being either with or against the mob very much." Although the obvious goal of stock investing is to buy low and sell high, human nature frequently leads us to do the opposite. When we see all of our colleagues succeeding in business, it inspires us to work toward financial freedom. In order to prevent further price falls, we also have a tendency to sell our shares as soon as the market collapses. Buffett likes falling stock prices because they offer chances to buy at a discount. This explains why Buffett had an extremely busy year in 2022. If you noticed that all of the prices had been dropped by 20% while you were in your favorite store, would you panic and run out of the door? Not. Price reductions on Buffett's favored stocks are welcomed. Warren Buffett once said, "If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. This is one of the most significant statements about investing you can learn from him. He doesn't choose stocks with the idea that they would increase in value this week, this month, or even this year in mind. Buffett invests in stocks because he wants to keep the businesses for a long time. He still frequently sells stocks for a variety of reasons, but he approaches the majority of his assets with the idea of holding onto them for a long time. Buffett believes that if a person can't adopt a forever mindset with their equity investments, one of the best investments they can make is a set-it-and-forget-it investment like an S&P 500 index fund. It's still vital to be mindful that Berkshire selling a stock does not always mean that you should sell it or predict how the stock will fare. Your investing thesis might need to be finished if you possess a stock that Berkshire is offering for sale. Berkshire sold all 6 of the stocks listed below this year. Verizon. At the start of the year, Berkshire had roughly 158.8 million shares of Verizon, a sizable telecommunications company with a market value close to $8.3 billion. The company may have realigned itself for a different economic and financial future because Berkshire closed out that stake in the second quarter. Berkshire might have had reason to be concerned. When Verizon released its second quarter results, it revised its adjusted earnings guidance downward, from a range of $5.40 to $5.55 to a range of $5.10 to $5.25 for the entire fiscal year. The company also lowered its prediction for revenue expansion. Store Capital Group. The sole real estate investment trust, REIT, in Berkshire's portfolio as of 2022 was Store Capital Corp., which the company owned for less than $840 million. Since Store is a REIT that benefits from advantageous tax treatment, at least 90% of its annual taxable profits were distributed as dividends. The company bought properties and leased them back to the owners under a triple net lease single-tenant business model, leaving them in charge of any maintenance expenditures. The stock has reached its maximum potential since the announcement in September that Store Capital would be acquired for about $14 billion in cash by the funds GIC managed by Oak Street. AbbVie. In the first quarter of the year, AbbVie, a biopharmaceutical company that Berkshire initially purchased for about $410.7 million, was quickly sold off. With the stock up more than 21% and greatly beating the broader market, AbbVie hasn't had a bad year. Results for AbbVie's third quarter were inconsistent, with adjusted profitability exceeding expectations but lower revenue than expected. The company also lowered the upper extent of its range for full-year earnings projections while maintaining the lower bound. Royalty Pharma. Beginning in 2022, Berkshire sold its approximately $344 million worth of Royalty Pharma stock. Before investing in royalty rights in such companies, Royalty Pharma acts as an incubator by financing biopharma research and development in a variety of methods. It is challenging to pinpoint exactly what Berkshire did not like, given that the stock has increased by more than 5% in a difficult year. The company's third quarter earnings and revenue surpassed analyst estimates, and the full year outlook was raised. Perhaps Berkshire merely didn't think the company had a bright future. Bristol Myers Squibb. Berkshire didn't like being around the pharmaceutical business. As a result, the corporation's portfolio of pharmaceutical companies had a terrible year. Berkshire sold the approximately $324 million worth of Bristol Myers Squibb stock it owned at the time in the first quarter of 2022. Because this is another stock that has performed fairly well, up more than 24% this year, something early this year left Buffett and Berkshire with a foul taste in their mouths regarding the pharmaceutical sector. Wells Fargo. It was well known prior to the start of this year that Wells Fargo, a significant bank, and Buffett and Berkshire had a falling out. In 2016, Wells Fargo found itself in serious trouble after it was revealed that bank employees had opened credit cards and bank accounts for customers without their consent. A number of fines and harsh regulatory actions, including an asset cap that prevents the bank from growing its balance sheet, have been taken against it thus far. Buffett was reportedly angered by the hiring of Wall Street veteran Charlie Scharf as the bank's CEO in 2019, despite the fact that Scharf appears to be doing a respectable job. Prior to the purchase, Berkshire had owned the shares for more than 3 decades. Warren Buffett is regarded as the world's best value investor. Value investing emphasizes buying securities at discounts from their actual value. The main goal of a value investor is to acquire shares of a company for less than $100, ideally much less. Value investors seek out and make investments in companies whose intrinsic values are far higher than the implied enterprise values represented in the prices at which the company's stocks are traded. The market will eventually recognize a company's full value, according to value investors like Warren Buffett, which will enhance the stock price of the company and generate profits for the investor. Warren Buffett is the best example of how effective long-term compounding works. Buffett profits from the capacity to consistently reinvest the operating cash flow generated by Berkshire's businesses, the strength of compound interest, and dividend reinvestment. How successful is this? Compared to the S&P 500's annualized return of 10.5%, since Buffett took control in 1964, Berkshire has had an average annualized return of 20.1%. Until you realize that over time, this has resulted in a total gain for shareholders of 3,641,613%, as opposed to just 30,209% for the S&P 500, this may not sound all that noteworthy. Typically, Buffett puts in long hours at his Omaha, Nebraska office. When investors learn that he spends the majority of his time alone, reading or doing nothing, they are typically astonished. According to Buffett, one of the secrets to his success is learning as much as he can about the financial world. He believes that knowledge develops with time. This concludes the video. We shall return soon with yet another educational film. Don't forget to share and like this video. Up until then,